Hello and welcome back. In the previous week, we saw a sharp sell-off in the index where Nifty tested lows below 19,300 levels, and on Friday, it did manage to recover some of the losses, but overall the index was nudging around its crucial trendline support on daily chart. So we need to see going forward if it sustains above that trendline support or not. This is the trendline support that I'm talking about. So index has been nudging around it for last since Friday actually. So if it sustains below 19,300 400 zone, which is immediate support zone for the index, so if it decisively sustains below 19,300 mark to be precise, which was the low made on Thursday, in that case the index is likely to see a correction up to 19,000 mark on the lower side, or it could be even 18,900 mark also, but we need to see if it sustains below that level or not. On the higher side, the index, if index manages to hold this trendline support zone and moves ahead on the higher side, then in that case we are likely to see the levels of 19,800 being tested, and that level is likely to act as a resistance. So on the higher side, 19,800 850 zone would be the resistance zone for the index, and on the lower side 19,300 400 would be the support zone for the index. Broadly speaking, 5 and 13 days averages have converged, and in fact 5 days average has slipped below 13 days average. So we need to see if this momentum again picks up going forward or not, because the broader setup that we are referring to for last few days is still strong. If we look at the Nifty on the weekly chart, there is quite a positive chart setup that we can see. On the daily chart, we have seen some correction in last few sessions, but broadly speaking the undertone is still positive, and until and unless Nifty holds above 19,300 mark, it is likely to remain positive. As far as Bank Nifty is concerned, the in the previous Nifty, Bank Nifty also witnessed a sell-off where it tested lows of 44,300 on the lower side, but it did manage to stage a bounce back from those lows, and currently it is hovering around 44,950 mark. So we need to see if it holds above previous week's low of 44,300 or not, because any close below 44,300 would trigger the next down cycle, down move in the bank index, and in that case there could be a dip up to 43,400 500 zone on the lower side. On the higher side, the index is likely to face very strong resistance around its trend line, because the trend line that we can see here, which was acting as a strong support zone previously, now it is going to act as a resistance. So any move towards this trend line is likely to act as a resistance for the index. So 45,500 600 is likely to act as a hurdle zone for the index, and after that 46,000 would be the next hurdle. Like Nifty, we have seen 5 days average going below 13 and 26 days average in Bank Nifty as well. So in the very short term, there are certain concerns as far as momentum is concerned, but broader chart structure still remains very positive. If we look at the broader structure of the Bank Nifty, it is not showing any major weakness as such, although we have seen some correction in the last few sessions, but broadly the setup looks quite positive, and it is likely to remain positive and until and unless we hold the lows of the Thursday session for both the indices, Nifty and Bank Nifty. So buy on dips should be the strategy for those who are positional traders, and in the very short term, any move towards in 19,750 19,800 can be used as a shorting opportunity for the very very short term trading as far as Nifty is concerned, and in Bank Nifty any move towards 45,500 zone can be utilized for going short in the index. This is purely for the very short term trading, purely momentum trading, but broadly those who want to initiate a positional trades for more than 15-20 days, they can definitely think of buying on dips as far as both the indices are concerned. Standard warning: Please note that investment in securities market are subject to market risks. Read all the related documents carefully before investing.